All right, what's up, guys? Taylor here on November 20th, and the volatile back and forth of November continues. We had the initial gap up here today on the Nvidia earnings, and yeah, one of the bigger pump its and dump its I think you're going to see. Q's open up about 2% into the 612 level, and here we are down about 2.5 at the close. Nasty, nasty. So on the indicator here, bears have pretty much got full control on the 2-hour, the 1-hour, the 30-minute, 15-minute, and the 5-minute time frame. Each of those printing an active big 3 sell signal. And then for the rankings here on the live dashboard, we aren't getting any signs of improvement that would suggest to me we found a bottom. We got the QQQ at negative 22% of its best score, the S&P's at negative 24, and then part of the problem down here for the sectors, the things that look decent, biotech at a 57, gold getting better, healthcare and silver not too bad. The things that have decent scores, they're not going to take the S&Ps to an all-time high. For that, you would call for the SMH. SMH currently a negative 18. We want better action for the XLK at negative 28. So yeah, bit of a tough spot here. The one thing working in the bulls' favor, until it isn't, I think is the structure and the trigger here on the weekly time frames. So if we jump over here to a weekly QQQ, and again, like I mentioned on the indicator, bears are in full control on pretty much all of your lower time frames. For the weekly time frame here, the bulls have still got a good grasp of it. 13 points out of 15 on the scoring system. We have the green label for the trend, structure, and momentum. And from a bigger picture point of view, this could just be a healthy, buyable pullback. We bottomed back in March and April. We rally a good 55 to 60% off the bottom, and we do that without, up to this point, ever pulling back to a weekly buy zone. The thing about it, if this is a 15-minute QQQ, the pullback's a lot less emotional. You don't get all the lower time frame damage. I think in a lower time frame, it's maybe easier to see it for what it's worth. Weekly time frame, the Qs are down, 8 or 9, maybe 10% off the highs. Short term, it can all feel a bit more bearish. You're getting the ugly action on your 1 hour, your 30-minute. Off the bigger time frame, it could be a typical, they pump it, reversion to the mean. And maybe down to that 21 EMA, you find a bottom, they rebuild, eventually turn the corner for a path back into a high. So I think for the bulls here, that's maybe their best chance. Can the QQQ hold the 582 level? And for the cash S&Ps here, right, great looking weekly chart, good structure, stacked EMAs, 21 above your 50, 15 points to the 15. Till things change, indicator says I want to buy that. The timing and the alignment to buy that, that's what's missing right now. I want to wait for a morning ideally. We are above the weekly 21 EMA, we got the structure, got the pretty colors, and then I can look over here to lower time frame. And rather than a 1 hour, 30-minute, and a 15-minute sell signal, I've got the alignment and the trigger for a long on a 1 hour, 30-minute, and a 15-minute buy trigger. So that, my good friends, is part of the recipe. Can the S&Ps and QQQ hold their weekly 21? On, again, what for now remains overall bullish charts. Can we hold? And if we can hold, they've got some work to do. They have to first cancel all the sell signals, go from bearish to neutral, and eventually neutral back to bullish. So over on my end, we are being patient in the room for now. But for the sake of conversation, let's say we go down a bit more and we do hold here. And we rebuild, we stabilize, and eventually turn the corner for a path higher. If that is the case, what are a few names we're liking? One would be the weekly squeeze here for Nvidia. Granted, not all that impressive after earnings. But I like the squeeze setting up. We have the perfect score of 15. That makes for an A+ setup. And with price so close to our 21 EMA, if we can get a better, if we can get a better market behind it, allergies are kicking my butt here. If we can get a better market behind it, I think off that squeeze trigger, a great risk reward. If we can buy it around 180, 185. I think the risk is a move back below your 21 EMA. Call it, maybe 5-10 points of risk in exchange for what eventually could be a path into about 215, 220 off that weekly squeeze. I like the risk reward. I don't like the market. Gotta wait until I like both. But we're going to keep an eye here on Nvidia, and then we have the January 500 calls for Tesla, which of course we're sitting through a bit of a pullback on, but a lot like your QQQ. Big weekly squeeze back here. Price kicks off the 21 EMA. From that, Tesla's up 30, 40, 45% in a few weeks. And she gets a bit tuckered out, all the chop, you pull back to the 21 EMA. Everything for now calls for a buy here at some point. Good structure, good trend. 15 points at a 15, but like your QQQ, I can like the weekly chart all day long. The indicator can like it all day long. I need my lower time frames to confirm the entry. Right now, Tesla has a 30-minute, a 15-minute, and a 5-minute sell trigger, so not an ideal time to jump in and buy more. If we can get buy triggers, I do want to buy more. So we're going to keep an eye here on some of the Tesla, watching Nvidia, and then there's also a weekly squeeze here for Amazon. That one in better shape back above 225, and then jumping over to Google and the Apple. We will do Google first. If we can get a better market behind Google, I think a continued path in the higher prices here off of the daily squeeze. Brand new daily squeeze, we have the green arrow. That makes for a good entry on an A+ setup. Going to watch Google here, and finally we're going to keep an eye on the Big Apple. And for Apple, if you can get better, better QQQ structure, better S&P structure, a little bit of oomph in the market behind it, I think your daily squeeze here could make for a good path into what would likely be brand new all-time highs for the end-of-year push. Checking the indicator, and I think our timing, if you bought it now, is a little bit off. Neutral on the trend, bull on the structure, and bear on momentum. So going to give all the ideas a lot more time. I like Apple, I like Nvidia, I like Tesla, I don't mind Amazon. But if the Qs break their weekly 21, if the S&Ps break their weekly 21, I don't think any of them work. So one more time, first things first, can the indexes hold their weekly mean? If they can do that, can they begin the renovation on a 5-minute, 15, 30-minute, 1 hour? Clean up all the issues, go from bearish to neutral back to bullish on the indicator, and then, could be the process of we had a big spooky pullback. We got the old markets in turmoil, and it's nothing more than a pullback to a buy zone on a really bullish chart. We'll find out here shortly. I'm not going to make the assumption, so taking things day by day, working more of the day trade mindset. But there you go, guys. Key levels on the S&Ps, key level on the QQQ. For now, weekly charts are bullish. They're fully intact. Lower time frames are going through it. Thank you all for watching. If you found it helpful, like and subscribe. And if you want to interact here, down in the comments, let me know what y'all think. Comment down below. Do we bottom here and rally off the weekly 21? Or do you think we break it and we got a bit more of a flush to go? We shall find out. But thank you all for watching. Have a great night. I'll talk to you very soon. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.